welcome you tuned into Market Fatafat with me, Ankita Saxena, and with me is Sharad Dubey. In the next 1 hour, we'll take you through all the top buzzers in trade and why they are buzzing, either on the back of news flow or on the back of technical charts. But first up, let's take stock of how the market is shaping up. Sharad, this is another quiet day coming in, very range-bound session, at least on the frontline indices, except for Nifty Bank, which is picking a little bit of a momentum, given the good updates coming in from Kotak Mahindra Bank. But nonetheless, market is pretty directionless because the trade war, the trade closure has not come through.
Exactly, Ankita. It's been almost 7 sessions. If you look at it, consolidation is there in the markets, and most of the technical analysts have also stated that there is no much action happening. If you look at the numbers, 25,450, that is the straight line throughout the day's trade we are looking at, and still now Nifty is flattish as well. Apart from this, also if you look at Nifty Bank, there is a recovery happening, and of course that contribution is coming from Kotak Mahindra Bank because of a strong quarterly update as well. That is roughly 176 points up as well. Stock specific, if you look at it, broader indices are still underperforming, and certain segments are there, such as the AMC segments, that is actually doing well. But on the other hand, the brokering stocks, the CDSLs, the BSEs, they are actually falling down in trade. Nifty mid cap, Nifty small cap 100 index also we are looking at. There is a selling pressure still continuing. Of course, BSE would be in focus. But now we are having our guest Osho Krishan. He's the Chief Manager and Technical Derivative Research at Angel One. Good afternoon, Osho. How's the market looking like from current levels?
Very good afternoon, Sharad. Firstly, thank you for inviting me at the show. So no doubt we are witnessing a very lackluster trading session from the past 3-4 days. There has been nothing much to do in these kind of market because on the both side we are witnessing that only the sell side only we can see some kind of momentum in the benchmark or the key indices. So only for writers there is some kind of activity that can be seen. So short straddle and strangle can be suggested at these levels, but overall there has been no key development in the benchmark index or the whole key indices. So for Nifty, again, the view remains the same, which is from the past 3 days, that on the higher end, 25,500 is the resistance. Once it gets breakthrough, then we can see some kind of movement towards the zone of 670, while on the lower end, 25,400 followed by 300 is a support zone where we are having a buy on dip kind of an approach in such kind of market.
Alright, nonetheless, buy on dips is a common consensus whenever there is a buying opportunity. Perhaps it's an opportunity to get into this market. But let's get going with all the stocks that are in focus today. First up is Navin Fluorine, which is in focus today. That stock was up 3%, after the company announced the launch of its qualified institutional placement, a QIP, to raise 750 crore rupees. Now, the floor price for that has been set at 4,798.28 per equity share. The company had earlier said that it would raise some 750 odd crores via share sale to institutions. On the back of this QIP raise of 750 crores, Navin Fluorine is up and away in trade, has given up those morning gains, but nonetheless trading with gains of 2% right now.
Well, yes, Navin Fluorine, you see it's up 2% in the day's trade. Osho, what would be your call?
See, on Navin Fluorine, yes, the counter is looking decent. It has gained very, very positively in the recent trading session. But again, looking at the technical front, overall the technical setup is on the extreme overbought terrain. So one should remain cautious in the counter. But although there is no sign of strong profit booking or correction in the counter, so it will be advisable to hold it with a trailing stop loss, which will be approximately around the zone of 47.50, which will be the 20-day exponential moving average. And I'm not expecting that there could be a strong correction in the counter. Yes, no doubt there can be some kind of profit booking followed by buying traction, but overall trend remains bullish in the counter.
Alright, trend remains bullish on the counter, but let's move on to the next counter that you picked out for us, and that's Bata India, Osho. This one is also trading with gains of almost 2% in today's trading session, but in the last 6 odd months, it has been correcting over a period of time. So from here on, how do you see this moving on the charts?
See, overall, no doubt the longer term perspective, technical aspect looks very bleak in the counter, but from a short term point of view, the counter have started gaining traction from a very strong support of 1200 kind of a zone. So I'm expecting that in the near term period, once it crosses the zone of 1280, 1275 kind of a zone, then we can see approximately 125 to 150 kind of upside movement in this counter. So I'm expecting that in a short term point of view, one can look for buying opportunity because the risk reward is very much favorable at current market price. So at current levels, one can try to accumulate, keeping a strict stop loss of 1200. On the higher end, I'm expecting 1360 followed by 1400 kind of a target from short-term point of view.
Well, yes, Bata important technical levels to focus on. But up next is SRF, a strong annual report coming in. The commentary for FY26 also very promising. The stock is near its lifetime high levels as well. The company will be focusing both on the greenfield facilities and the brownfield facilities, where the expansions and the upgradations of existing facilities would be undertaken. Now, these projects would be coming in across the segments. Now, there is one interesting point as well, where overall the debottling projects over the 18 past months have actually resulted in increase in the chemical business overall by a capacity of more than 30%. Osho, what would be your views on Canfin Homes?
For Canfin Homes, this counter is looking very positive to me. There has been very strong momentum in the recent period. There has been V-shaped recovery on the daily time frame chart. It is now on the verge of giving a breakout on the technical front. So I expect that in the short-term duration, the counter has the ability to move towards the zone of 850 on a very immediate term. And once breaches the zone of 850, then we can see nearly 920 kind of a zone from medium-term point of view. And even though if there will be any kind of blips or any kind of profit booking that can drag the counter towards the zone of 780, 790, then that should augur well for the buyers in the short term.
All right, moving on from Canfin Homes on the charts to a counter that is declining in trade as a top nifty loser, that's Titan. Ravindra, you've picked out quarter one updates come in for Titan. The D-Street has clearly given it a thumbs down. Take us through the numbers then.
Well, yes, Titan has announced their Q1 FY26 number, and for the consumer business, Titan growth was in Q1 was 20% year-on-year basis, and company added 10 new stores in Q1. And with this, the total consumer business stores stand at 3,322. And if we talk about domestic business, then domestic business saw a growth of 19% on a yearly basis and added 9 new stores in Q1. And with this, the total stores stand at 3,291. Now coming to jewelry segment, then the jewelry segment saw an overall growth of 18% on a year-on-year basis, but disappointing revenue growth. Revenue growth for jewelry business was disappointing, and LTL growth for Tanishq, Mia, Zoya is in low double digit. An increase in gold price led to softness in the consumer purchases. And if we talk about watches and eye-care segment, then watches segment saw a growth of 23% on a year-on-year basis, and eye-care segment saw a growth of 12% on a year-on-year basis. And Macquarie has come out with the note, and they have maintained their outperform rating with target price of rupees 4,150. So on back of the weak jewelry segment growth, stock is under pressure, and the stock is down more than 5.5%.
Well, thank you very much, Ravinder, for the information on Titan. But let's focus on Cummins India. The stock itself for the last 4 sessions, the volumes have been picking up. The stock up almost 4%. What are your views on Cummins India, Osho?
See, this counter, as you mentioned, that has been gaining a strong traction from last couple of trading weeks. So I expect that this should continue on the technical front. This counter has seen major developments. There has been positive crossovers among key moving averages. And also on the technical front, there has been very positive aligned with the momentum in the counter. So I expect that with the kind of a movement and the breakout that has been seen in Cummins India, I expect that on immediate term basis, 3600, 3650 is the next potential target that one can expect from short term perspective. While on the lower end, now it has formed a very strong base or a support zone near the zone of 3300. So 3300 should be acting as a very strong support, while on the higher end, 3650 should be the next target for short-term traders.
All right, so that's Cummins India on the charts, the technical view coming in. But coming to you for the fundamental views, the news flow coming in on Adani Power. Now that stock was up in a way 3%, has given up those morning gains, but nonetheless, a strong news flow coming in. Kanishka, take us through that.
That's right. Adani Power is in focus because it has officially completed the acquisition of Vidarbha Industries Power for a price of 4,000 crore rupees. Now, this asset includes a 600 megawatt coal-based power plant located in Nagpur and was acquired through the insolvency route, with NCLT Mumbai giving the final nod on June 18th and implementation completed on July 7th. Now, what kind of impact will this have? Now, this acquisition pushes Adani Power's total operational capacity to over 18,000 megawatt. And as the company puts it, it is on track to hit over 30,000 4,000 megawatt by FY30. Now, this would be achieved through a mix of brownfield expansions and also greenfield projects. The company says this is part of a larger strategy to turn around stressed assets and ensure reliable and affordable base load power across the country. Now, on the back of this Vidarbha Industries acquisition, Adani Power shares are in the spotlight today, but like you said, off the day's high, but still continue to trade in green.
Well, yes, Adani Power still trading in the green after an important acquisition. We are going to take a small break, but after the break, there's going to be a lot of action in Market Fatafat.
Welcome back. You're tuned into Market Fatafat, where we are getting you all the buzzers in trade and on the back of news flow or on the back of technicals. And Osho, let's come to you for the technicals then. HUL is what you have picked out for us. Now, HUL has been picking up pace, in the last 5 odd days. It's done well. In fact, if you look at the Q1 updates that are coming in from the FMCG basket, it has been incrementally positive, right? So on the tech check, what do you see for HUL? Do you see the momentum to continue?
See, overall, the whole FMCG space was very out of limelight from the past, I guess, 3 to 4 months. But in the recent period, what we are witnessing that there is some kind of buying traction in the whole space, not only HUL, but HUL is placed at a very strong support zone. So from a risk-reward point of view, the counter has a very strong support near the zone of 2200. And I'm expecting that with the kind of traction and with the kind of retracement this counter is facing, it has a potential to retest the zone of 2600 to 2650 in the short-term period. So that's why I have picked HUL at current levels, which is looking very lucrative with a very limited risk on the downside, and on the higher end, I'm expecting a decent movement in the whole FMCG basket in the coming period.
Well, yes, FMCG basket would be in focus. Apart from this, AMC stocks will also be in focus. The regulations for the business activities are becoming lenient as per AMFI. And also interestingly, there has been a brokerage initiation coming in for the AMC stocks. Now, Antique has come out with its report. HDFC AMC, ABSL AMC, UTI AMC, all stocks buzzing in trade. They are initiating their coverage with HDFC AMC buy rating coming in, target price of 6,000. Nippon Life AMC target price of 950 with a buy rating, and lastly UTI AMC with a buy target price of 1,500 rupees. Now, of course, the belief is that the mutual fund industry is poised for a 15% growth in total AUM and a 20% CAGR growth in the overall equity AUM space. Now, of course, speaking of equity AUM space, we are also having Chakri Lokrupi of LGT Wealth talking about the top picks in the AMC space and the shares, the rationale behind these picks.
The leaders clearly in this business have, majority of the market share. So, HDFC, Nippon, these guys, both a combination of active funds, ETFs, as well as, index funds. And, they have done a fantastic job, the industry, AMFI, that is, in getting the SIP bit of it. You played a big role too. And so I think, stick with the big boys. That's what I would.
All right, moving on, within the financial basket, ICICI Prudential Life Insurance is what you've picked out for us. Osho, tell us, what do you see on the charts for this counter? Good pickup perhaps in the last few weeks, if you will, but do you see this to continue?
See, technically, there is a very interesting pattern formation in ICICI Pro Life. So overall, there on the technical front, we can say that it is forming a cup and handle kind of a pattern. And still the breakout is still await, but I expect that in the coming period, any breakthrough above the zone of 680 can provide a breakout in the counter, and from there onwards we can expect a target of nearly 710 to 720 on a very short term perspective, followed by 780 from medium term time frame. So at current levels, even the counter have started gaining traction and is at a very strong risk reward favorable kind of a zone. So one should definitely keep this counter in their watch list. The time we witness a breakout, one should definitely try to gauge the momentum in the coming period.
All right, moving on from ICICI Prudential to yet another counter from the financial space. Kotak Mahindra Bank, the top nifty gainer. Of course, a good set of Q1 results have come in, and it is buoying the sentiment in the entire banking pack. Ravinder, take us through what do the numbers look like?
Well, yes, on back of their Q1 FY26 update, Kotak Mahindra Bank is in focus, where bank's total deposits saw an uptick of 14.6% on a yearly basis to rupees 5.12 lakh crore as compared to 4.47 lakh crore. And if we talk about CASA, then CASA also saw an uptick of approx 8% to rupees 2.9 lakh crore as compared to 1.94 lakh crore year on year basis, and but it is down by more than 2% on a sequential basis. And net advances saw an uptick of 14% to rupees 4.44 lakh crore. And Motilal Oswal has come out with a note on Kotak Mahindra Bank, and they have maintained the buy rating with target price of rupees 2,500. They say that the Kotak loans growth remain strong, outpacing system growth and exceeding their expectation, while deposit growth remain healthy and broadly in line with their estimates. Business growth healthy and CD ratio increased to 86.7%, and a CASA ratio declined to 41% as compared to 43% in Q4 FY25. They say that the bank CD ratio rose to 86.7% from 85.5% in Q4 FY25. So back of this business update, Kotak Bank is in focus.
All right, Kotak Bank in focus on the back of strong Q1 updates coming in. But Osho, you have also picked out Kotak on the charts. Clearly, the stock is up and away, firing on all cylinders today because of the quarterly updates that have come in. But on the charts, do you see this momentum to continue? It is also, heading towards its perhaps its 52-week high. Do you think it is perhaps going to touch the 2,300 odd levels?
See, overall, the technical setup is very positive in this counter. The counter have seen a breakout from the zone of nearly 1980, 2000 kind of a zone, and again has retested the same levels in the recent period. So I expect that the momentum should continue in the counter. Overall, technical setup is very robust, and 2300 is just a number for the counter. Once it breaches the zone of 2300, then I expect 2380 to 2400 to be as the target for the kind of a breakout that we have seen on the weekly time frame chart. So 2400 is the price that I'm eyeing for the counter from short to medium term point of view.
All right, moving on then, coming to Kanishka. Kanishka, you picked out the textile stocks. Now, all the textile stocks are buzzing in trade. Tell us on the back of what news flow are these textile stocks in focus?
That's right. Textile stocks like Gokuldas Exports, Arvind Limited and Bombay Dyeing, they're all buzzing in trade today following that latest tariff announcement coming from the US. Now, Trump has imposed high tariffs on textile imports from Bangladesh and Vietnam, with Bangladesh facing a 35% duty, sharply higher than the 10% baseline rate, but it is still slightly lower than the earlier 37% announced in April. Now, this sort of creates a potential opening for Indian exporters. Meanwhile, the UK-India FTA, that is also being seen as a positive trigger for the textile market, potentially making Indian textiles more competitive in the global market. Adding to this momentum, there's been a pickup in HNI buying across select textile counters, while raw material prices, they remain stable, supporting margin visibility. Now, with tariff tailwinds and export potential in the spotlight, textile stocks are buzzing in trade today.
All right, with that, it's time for a quick breather. Don't go anywhere. After the break, we'll get you all the buzzes on the other side. Stay tuned.
Be alert, be scan safe.